explain how quickly you raised the funds and where you raised them from.
It was mainly our standard LPs who've been good long-term partners with us. We had positive net dollar retention, which in kind of the world of SaaS means that you raise more, you increased your base of capital from those who were already with you, but we did add a number of additional LPs. I think the reality is that, we've been through kind of a bumpy time in the venture business, but if one can promise the kind of focus around this opportunity, the ability to win, be in great companies and build a portfolio around AI, it's very compelling to new investors and existing investors.
What's been so interesting is instead of VC money going into a lot of these AI startups, particularly the foundational model types, we've seen money come from big tech, ultimately. How have you discerned what is the right sort of reward structure that you need to see from companies that are sort of wrapping around AI, perhaps not building their own models, or indeed whether it's those that are building models? How do you discern what is the best VC-backed company?
Yeah, I think there's really two massive opportunities right now. One is kind of this generative AI stack. So in technology trends, like when a bunch of companies moved to the cloud, we had a whole rebuilding of infrastructure, and that's exactly what is going on here in AI. And then you look at the application layer, and we feel like the application layer is a 10-year trend. There are a bunch of companies that are, the entire portfolio, you mentioned a lot of big companies, we're at this like perfect intersection of technology readiness and kind of CEO company readiness. There's this real move to kind of adopt AI as fast as possible. We'd say that the application opportunity is really a 10-year opportunity. And maybe even some of the best applications will be built in a couple few years as the technology matures and entrepreneurs' imagination and comfort with deploying these technologies evolves. But right here and now, we feel like there's the biggest opportunity in picks and shovels. So it's those kind of infrastructure building blocks. Obviously, NVIDIA, the LLMs like Anthropic and OpenAI, but there's a whole big middle there that has to happen well for applications to be built. So it's picking models, training models, observing models, optimizing models. There's just a whole big body of work that's coming together right now that's going to make all of this easier and accelerate the application innovation even more so.
You, of course, Menlo Ventures itself, one of the oldest VCs from the Bay Area. Is the sort of founder you want to back coming from the West Coast? Is it now dispersed throughout global opportunities now?
The venture business has gotten more global, but San Francisco's definitely having another renaissance. The Bay Area, we have the most AI talent, I'd say, in the world, and people are kind of flocking back to be part of a lot of these companies. So there are many pockets of venture capital these days. Obviously, New York's been a big hub, some good infrastructure opportunities and application companies there, LA, Seattle, Austin, et cetera, Boston. But San Francisco for AI is definitely the epicenter.
Matt, I want to go back real quick to that kind of 10-year time horizon that you're outlining. It's kind of like venture capital 101, but across the startup curve, loads of folks come on this show and say, the reality is 90% of these startups are going to fail, AI startups, 90%. Do you share that kind of outlook?
Well, I think that the numbers are a bit better than that. I think about 50% of companies, fail, don't return capital. There is a gold rush right now, and rightfully, because the opportunity is so big. And just to put that in perspective for you, historically in venture, if you went from 0 to 1 the first year, 1 to 3, 3 to 10 the third year, that's really good by classic venture standards. We're seeing companies in our own portfolio, not to be named, but going from 0 to 20 and 0 to 100 in 1 year. So rightfully, there's a gold rush around this market. And there will, of course, be some things that don't stand the test of time, but we're more leaning into it optimistically that we're seeing signals that this is the fastest moving ecosystem we've ever seen in venture.
Matt, when a founder comes to you with their pitch deck and it's super shiny and exciting, how much emphasis do you put on their access to compute? Knowing, like, capital is one thing, but their ability to actually get the resources to build the thing that they tell you they're going to build.
Yeah, I feel like that problem's been a little bit overhyped. I feel like Jensen's going to ramp up production, and a number of other companies are coming forward with GPU capabilities. The main issue right now is people really figuring out the way to do something innovative. I think at the application layer, especially, There's a lot of bolt-on things, and there should be, because you can take a current application, apply an LLM to it, and it makes the application smarter, better. When in history we had this opportunity for a computer to do reasoning and writing at the level that it's doing right now? So all those things are super exciting, but there's kind of early stages for imagination of what's possible, and that's really what we're going to see evolve and accelerate over the next couple of years. So I'd say as we look at entrepreneurs, it's less about can you get access to compute? Feel like that'll be solved. It's more about what are you doing that's distinctive that others can't do?